These are the opinions of Nick Webb, Mike Carrazzo, Jim Reed. They are not the opinions of Ryerson. This is not investment advice. We recommend you do your own research, but we're going to do our best to get you the information that's live and in front of us right now within the commodities world. And with that, we'll end it on the aluminum side, where we probably have the most to talk about. But just like the nickel chart, it almost looks identical in terms of it was in a bullish trend to begin with, very much so, had an upward momentum coming out of the COVID lockdowns. The last couple of weeks, we've seen that go parabolic, almost straight up. It's almost crazy to say, because right back here in 2018, this would have been when the United States enacted sanctions on Russia. It's amazing to see how small this blip is in comparison to what we've seen over the last several months. It's the same country producing the same aluminum, but I think just given the fact that we were coming into this with, one, so much liquidity printed by the governments, two, tight supply demand conditions, tight supply chain bottlenecks. You factor all those things together, I think we've just created a more intense storm for aluminum, and you can just see it visually in the charts in terms of these gaps higher and how volatile these moves have become. Again, I think that if tensions were to subside, I look at this chart and it really does suggest that conditions are pretty overbought right now. There's a lot of panicking going on in the aluminum market right now. Some of that is very rightfully so, because there are shortages. There's a lot of scrambling to try and find that material in a fairly strong global manufacturing environment. But again, like I said, it looks pretty darn overbought right here. Doesn't mean it can't go higher, but it's a very interesting space at the moment. Flipping over to a chart we haven't looked at in a while, but this is alumina. So this is going to be the raw kind of dirt that goes into the production of aluminum. And again, referencing those 2018 prices back when we had sanctions, this would have been when there were actual real sanctions placed on Russian product and on Rusal specifically. At that point in time, we saw immense volatility and actually even more volatility in the raw ingredient than we're seeing right now. I don't know for sure whether or not we're going to see these types of price moves here in the coming weeks and months, but it certainly looks like it at least rhymes with what happened back in 2018. Maybe you can make the argument that we're not quite seeing the volatility now because there haven't been formalized federal sanctions on Rusal just yet. So there's a little bit of a gray area where some people maybe are still playing in that market, playing in that space. But we'll have to see how that plays out in the coming days, because there's always a potential that additional sanctions, specifically on aluminum, could come. My personal take is I think there's probably going to be an attempt to avoid sanctioning anything commodity specific for two reasons. One is obviously if you're sanctioning commodity related